I think they're trapped. I think they have really, the only option is to just keep lying and inflating away the currency. And the CBD system, I'm watching it. I think Powell said today they're going to have a report on central bank digital currencies soon. And you got the Fed Now service coming out in 2023, which I believe is the underlying technology that'll probably service the coming fiat CBDC system. And that just basically means that I think the CBDC system is basically going to be set up so they can hand out stipends monthly, because under massive inflation, there's no way wages are going to keep up. Anybody who's done any research on big inflation knows wages never keep up with inflation. And so you're going to need something to stipend the US citizen with so they can afford food and they will not riot in the streets. And I think that's what that system's for. Once that system's in place and going, you can let the inflation run wild, because you can just increase the amount that you hand out per month stipend wise, year on year. So, it could get pretty interesting if the inflation, say, gets into the teens and it's admitted, because that probably means that the inflation's already at 20-30% per annum. And that's the kind of stuff I think we're coming towards.
Hey everybody, this is Rob King of 𝙂𝙊𝙇𝙑𝙀. It is Tuesday, January 11th, 2022. I can't believe we're in the new year. I keep saying that, but it still hasn't hit me just yet. 2022. I remember when 2000 was a big year, and I'll show you how old I am. Coming back to the program, you've seen him many times at our conferences and on the program. James Anderson, Director of Content for SD Bullion. James, how you doing today?
Good. Thanks for having me back on. It's good to be back.
Yeah, good to have you on. So we were talking before the video, and it seems like we've got a bit of a slow year in terms of metals prices. What do you think's going on so far to start 2022?
Yeah, I mean, obviously it's started kind of slow. We're still in the 22, the lower range of the consolidation that we've been in since, July of 2020, basically. Mm-hmm. I published a video recently about why you should own silver now, not later. And, obviously I'm speaking on behalf of our book, which is we're a bullion dealer, but as well, we're also investors in gold and silver. Our inventory is a good portion of the actual capital of the company, which we continually try and service customers with by building that inventory and growing. And I'm irresponsibly long into silver bullion, and look forward to a day when I can start selling that off for a profit and moving to other places. But for now, not all of it, obviously. I mean, as long as we're under a fiat system, and most likely it'll be under a new iteration of a CBDC system. Silver at 22 spot is still good value, I think, because the lower bound, it's not that much. I don't think, if you look at it technically, 21 is support right now. You would have to have a real deflationary problem for a spot price to go lower than that. And as we all know, last time spot price went down and dipped to 13 during the COVID era, bullion basically stayed in the 20s. So in terms of bullion, the downside risk is very minimal and the upside is high, and that's what we call an asymmetric bet. And I think silver still offers the best asymmetric bet in terms of all the risk out there and all the reward potentially for it.
Yeah, I agree with you. One thing I did yesterday on the channel was a little breaking news segment, and I'd gotten some research for someone who was looking at the bond market. So we are starting off rough in the bond markets, even though people may not be aware. If you look at total yield on a bond, you have to look at price and interest rates, combine the two, not just interest rates. And when you look at total yield on the 30 and the 10 year, last week, we had the worst weeks in both of those that we had in 30 to 39 years. Right. And then the 10-year tips was the worst one, one of the worst ones dating back as long as that's been tracked, I think. So bonds really got hit from a total yield perspective last week. And I think it has to do with the Fed saying that they're going to taper, they're going to raise interest rates. So I want to get your opinion on that. Is the Fed in a position to actually do that? Obviously, the bond market's already reacted to that last week. Do you think that the Fed is actually going to be able to carry out that policy?
Yeah, I mean, they could potentially do 25 basis point interest rate raises this year. They could do 4 of them possibly. But remember what happened last time they did it in 2018 toward the end of the year. The stock market and the bond market threw a tizzy. And they called up the working group on financial markets, and immediately, the stock market had dropped basically 20% almost, I think, and in a matter of weeks in December. It was the worst December, I think, of all time. And Jay Powell did his little pivot, and basically the stock market rebounded from there. But it's, I always go back to the fundamentals of it all. The fact is that we have record debt piles that keep getting bigger and growing faster. And the unfunded liability pile is just gargantuan. It's really hard to wrap your mind around. You add it all up, it's, there's various estimates, but the safe estimate is at least over 100 trillion in unfunded liabilities, and some have estimated it over 200 trillion in unfunded liabilities. You have a GDP of, I think it's like 24 trillion roughly. It's just these numbers are unpayable, and so usually when governments get in situations like that, they either do one of two things: they just outright default, or they really devalue the currency. And I think going for the devalue of the currency more so than the outright defaulting. And so I think that's what a lot of this go direct policy was in August of 2019. I think the major central banks know that they need inflation come hell or high water, and they've done a lot in the last few years and trying to get that inflation to come about. And by blowing out their monetary basis, ultimately that's what's coming. Is, you think 7% inflation is high. I think it's going to get tremendously worse as time goes on. Now, it's going to fluctuate, obviously. I think there's going to be more financial crises, because there's a whole bunch that we tapered over in 2008 and haven't come to a real mark-to-market basis as to who's bankrupt and who's not. But ultimately, I think that's where we go. And in that time frame, they'll probably try and transition us into a new monetary standard, which will probably be more of a more shared monetary system than just the dominant US dollar version that we've been living under the last 50 years or so, or longer, obviously, because the US dollar used to be dominant reserve currency and it was gold backed. But ever since we went on the fiat standard, that's been the case still. So it's a long-winded answer, but the bottom line is that I think they're trapped. I think they have really, the only option is to just keep lying and inflating away the currency. And the CBD system, I'm watching it. I think Powell said today they're going to have a report on central bank digital currencies soon. And you got the FedNow service coming out in 2023, which I believe is the underlying technology that'll probably service the coming fiat CBDC system. And that just basically means that I think the CBDC system is basically going to be set up so they can hand out stipends monthly, because under massive inflation, there's no way wages are going to keep up. Anybody who's done any research on big inflation knows wages never keep up with inflation. And so you're going to need something to stipend the US citizen with so they can afford food and they will not riot in the streets. And I think that's what that system's for. Once that system's in place and going, you can let the inflation run wild, because you can just increase the amount that you hand out per month stipend wise, year on year. So it could get pretty interesting if the inflation, say, gets into the teens and it's admitted, because that probably means that the inflation's already at 20-30% per annum. And that's the kind of stuff I think we're coming towards.
So I agree with you, James, on the CBDC stuff. I think that's the system they have in place. Of course, you got the IMF and BIS writing papers on that and blog posts on that. So we know that's where they want to go. The US and UK are a little bit behind, though, the rest of the world, especially Europe and China. China's out in the front. I think it'll take a couple of years to get there. In the meantime, we're dealing with the system where I think they're trying to manage the crash. Like they're trying to, keep the Titanic from just going under, save as many people as they can. But it's a situation where it's very tenuous, right? So when you talk about Fed policy, it affects all the markets. Like talk about bonds and stocks. And people are going to flock to alternative investments. What do you think about Bitcoin and the private cryptos? And the reason I ask is because I get a lot of feedback on my channel about Bitcoin. Get into Bitcoin. Bitcoin the last 1 year, 5 year, 10 years has outperformed gold. The problem I have, a couple of problems that I see with that are Bitcoin's only about 10 years old. It's not a mature investment class, and it crashes. So last year we crashed down to 30,000 twice, once from above 60,000 and once from right at 60,000. It got up to almost 70 this time, and now it's already crashed down to about 42. It's at 42,972 as we record this. So is Bitcoin going to be a legitimate safe haven for people as they figure out if the bonds continue to do so poorly and we have a stock market correction due to Fed policy that we talked about? Are people going into Bitcoin, and is this going to become a legitimate asset class? Something that's actually stable?
I look at Bitcoin as being a speculative trade, essentially. So it is. Paul Tudor Jones, a couple of years ago, when Bitcoin was like $9,000 again, it was down that low, talked about gold versus silver versus Bitcoin. He talked about what's the fastest horse in the race to the base, essentially. What's the one that's performed the best? And at the time, I think he did bet on Bitcoin, and he was proven correct. I mean, it did a 6-bagger from there, maybe 8-bagger, or it was 7-bagger, something like that. I mean, it went up to almost 70 grand. So that was a massive trade that he probably did really well on. But it's a scalp trade. Paul Tudor Jones is not a hodler. He's not someone who's like a Bitcoin maxi. He sees it as being an asset class that is not as suppressed as the COMEX traded silver and gold market is. Although that may change in the coming years because it seems like it's getting more financialized than ever. I don't necessarily when I look at Bitcoin as far as its, case for it being like a long-term asset and being a store of value for the long term. There's better technologies out there already that are being used to actually code the CBDC system. And my suggestion, if you're going to speculate in cryptocurrencies, you might as well speculate in the ones that are being used to create the next system that we can bitch and moan all we want about it. There's not going to stop it. The Bank for International Settlements is out there actively working to get 90 countries on the system. That's over 90%. Over 90% of the global GDP is actively working on this or researching it. And so it's coming. And the question is, well, what's the technology underlying that? So you should do some research on that and maybe make bets based on, the coding and the actual technologies that are using it. And it's not Bitcoin. Bitcoin's way too slow and way too energy inefficient. There's many others that are much better, but I would only suggest that you speculate in those with money you can lose. And we started this conversation by talking about an asymmetric bet. An asymmetric bet basically means that the downside risk is limited. In cryptos, it's not. They can go to zero, and they often do. I also look at that space and I see a lot of fraud. It reminds me of like the 1920s, back before financial markets were regulated. Anywhere from the late 1800s to the 1920s, the amount of chicanery and ridiculousness that went on in the stock markets was crazy. If you go and learn about basic things like wash trading. I think wash trading is essentially what the NFT market is basically. And it's been proven article after article, year after year, all these people selling NFTs for gargantuan amounts of sums, and they're selling it to themselves to try and pretend as if there's value there. And they're looking for marks who fall for it and who send them send them capital for these things. And then they run away with the capital and hide. And a lot of the cryptocurrency market is that. I'd say 90% of it is that kind of stuff where it's basically, just look at some of the characters in the space. These people, I don't know, if you have intuition, you probably bells would be ringing off, that person is trustworthy or not. So I look at that space and I see it as being, you have to be very, very selective and you have to be very risk averse, and you should only speculate with what you can afford to lose. But the upside is extremely good if you get in on the right spot, if you get in at the right time. There's people I know who done so well with it that they are essentially can retire, now at early age. So it's not to say that there aren't potential for gains, but there's a lot of potential for losses too. And that's for me, I play more on the safe bet because I just see bullion as being a safer bet in terms of the downside risk versus the upside. And that's why I'm irresponsibly long in bullion at the moment. But I will speculate. If Bitcoin goes down further, and I do hope it does, down to 2030, because it pulls down all the other cryptocurrencies, I wouldn't mind putting, a small percentage of my portfolio in a couple of the ones that I think that are decent bets, because they're being used to actually code the CBDC system. And I don't believe that the central banks will turn around and just kill those central banks, those technologies, just because they were hijacked essentially to create this new system. So it's a long-winded answer, but the bottom line is I wouldn't bet on Bitcoin in the long term. I would bet on the smaller, more adept technologies that are being used to build this new system.
Yeah, a couple of things I wanted to add on to what you said there. First, if you look at the history of Bitcoin, you go back in the 90s, the NSA was asking questions. It's still up on MIT's bulletin board, by the way. The NSA wrote a post saying, what about digital currencies? They use the term wallet. They use all the terms that we use in Bitcoin today. And that was probably 15 years before Bitcoin was ever known. So then you have to wonder who is actually involved in Bitcoin. Was it contracted for the government? Is the government wanting the private sector to develop these cryptocurrencies and use the best from it for their central bank digital currencies? Now it's easier to make that statement, harder to make in 1990s. But when you see them doing that, they also went to a law firm, which is linked in that MIT bulletin posting, and said, can we have a government sovereign digital currency? And the law firm opined yes, because you had a fiat dollar, why not a digital one? If the reason for having a fiat dollar is here over, say, gold and silver, which are constitutional money, then it's an easy step to digital currency. So that, again, that was done back in the 90s. So whether or not the NSC is behind Bitcoin or whether they're just encouraging the private market to develop it, I think the government were the ones that really wanted to benefit from that before anybody in any of the regular citizens of the world really knew what a digital currency was. And that's something that you have to consider when you're talking about are they going to allow the private cryptos to survive? Maybe they will, but they don't want direct competition. We've seen what happens when people try to use silver coins as money or any sort of alternative currency. You know, the suits show up at your door and shut you down pretty quick.
Yeah.
So
the most important thing to the government is the sovereignty of their currency issue.
Right.
And that power and control is of utmost importance, and they kill for that. And so you'd be a naive person to think that you're somehow going to sidestep that with technology. Because again, they have a monopoly on violence. And so who do you think is going to win that in the long run? I mean, you know,
I mean, the guys with the missiles and the guns. I mean, we could have a revolution here in the U.S., but you'd have to have a lot more people willing to do that. And right now, I see divide and conquer. I see people angry at each other, not angry at the government, and that's part of the problem. Other thing I wanted to say about Bitcoin is, essentially, if you look at, because everything's trackable on Bitcoin, if you look at the trade flow, like you said, it's wash sales of a few entities up, and then when it gets high, they're selling to the suckers. And it crashes. And that's been going on over and over. And you can see that in the data. However, as you said, it can be a great speculative investment. If you see that pattern and you see what's going on, it happens 2 to 3 times a year. You just buy on what you think are the dips, and I'm sure you make a lot of money. I do have a lot of friends who run mining operations, who speculate in the cryptos, and they do quite well. So I you know, if you want to speculate in crypto, I got no problem with that, but I don't see it as a replacement for gold and silver, especially gold in terms of long-term.
No, and the central banks fully admit that they buy gold because, I mean, I think the Dutch central bank stated they buy gold because they know the stock and bond market at some point could go, it could ultimately fall apart. And gold is the asset that you use to reinstill confidence, you know, because it's the most proven and it's the one that's the bedrock of all finance. So that's why they own almost 1 in 5 ounces of gold that's ever been mined. So, I mean, the BIS published in Bloomberg in 2018. I showed a picture of it in this past video I did for SD Bullion, where it's the money flower graph, and the very stem of it is gold, and you know it shows what their plans are for CBDC systems and cash and private tokens and all that. Underlying it all is gold, and that's why they buy gold, and they've been doing so, especially increasingly so since the 2008 global financial crisis. Because I think underneath it all, they know that the system is sick and that it's broken, and that there's a lot of mark-to-market bankruptcies out there that have yet been fully acknowledged. And you know, the CBDC system will be handy in consolidating a lot of those bankruptcies.
So here's the money flower. Can you expand upon it? This is from the BIS article. You can see it's bis.org. Can you explain a little bit about what we see here?
So this one is, there's 2 examples that I constantly show, and this is one of them. This shows precious metal coins, which a lot of times in the other one, it just says gold. And, you know, gold a lot of times synonymously means silver too. But here it just shows you the history of, you know, the fact that, you know, all these currency derivatives, all these man-made arbitrary things that we've created have come, the source of it all has been precious metals, because that's been, you know, the money that we've used historically. And when you go down the attributes of money, it has the best performance in a lot of ways, because the number one most important thing for money is to be a store of value over a long period of time. And if you look at any of these other things, they've not been over a long period of time. Ultimately, every human man-made contrivance currency goes down and dies just like human beings. So it's just a matter of time. In a long enough time frame, they all end up worthless.
So going back to the electronic coins, they do have Bitcoin here. So they are recognizing that it's a derivative, but it's a derivative of real value, which is hard assets. You've got utility settlement coins, stuff like XRP I would throw in there, or maybe some of the stable coins potentially. Then you got other types of coins. All the coins though are up here. You even got Pokecoin, which is a lot of fun. So they're recognizing, yeah, that they're derivatives of what is real money down here. And that's really the clue. If you're looking for long-term stability in your portfolio and you're looking for what the central bank puts the most emphasis on, it's right here at the bottom of the picture.
Yeah. Then they've not gone out and done anything in terms of you know, stacking any other thing but gold. This pretty much since the 2008 financial crisis, and you know, that basically is the clue that people should take. And the math proves it out. I mean, if you go do the math from since 1971 to now, I mean, having gold as a bedrock in your financial portfolio has been helpful in terms of risk, reward, and performance. And it's just a mathematical fact. In a fiat currency system, you always need to have a position of bullion, because it helps to, you know, to preserve wealth over the time frame of debasement. You know, we've been running now for over 50 years I believe the dollar's down 85% since it was introduced, to gold and versus gold, and 70, even worse than that, actually. I mean, just 35 to now, what, 1800, do the math. It's a pretty bad underperformance. And so, what's going to change that trend? I don't think much. They've blown out their monetary base so much. I think if you look at like M2, it's up almost 40% since they did the August 2019 go direct policy. And then obviously the pandemic kicked out, and that gave them even more clearance to create more currency. And so that was a helpful thing to kind of keep the financial system together and falling apart. But that monetary expansion is already coming back. I mean, if you look, I often look at this website called 𝙂𝙂𝙇𝙑𝙀, and it shows consumer spending, week on week and how they're doing. And consumer spending in the U.S. is still at the moment about 25% above what it was pre-pandemic levels. And obviously, when the pandemic was acute in 2020, the amount of consumer spending was a lot lower. And so all this currency creation has gotten out into the consumers' pockets, and they're out there spending at levels way higher than they were before. And that's going to drive inflation. I mean, the fact that you go and look on Fred and it says, the money velocity is low. Well, yeah, money velocity is low because you blew out the monetary base so large. I mean, it's jacked up virtually every asset class you can look at, other than commodities, essentially. Everything else is basically in a bubble. And so, my thesis is basically, yeah, everything. So go ahead and hit consumer spending on the top left there. And you'll see just a massive explosion of consumer spending, pretty much since they started handing out MMT stipends. And so there you are. And I think Jamie Dimon made a comment on it just yesterday, that consumer spending is 25% above what it was before the pandemic hit. And that's not because people got 25%, wage increases. That's not what happened. They got a lot of currency handed out to them. And that currency, by the way, has been spent. If you look at credit card debt recently, I think it went up to record high levels. So a lot of the free currency that got handed out has been spent already, and people are now loading up their credit cards with consumer debts to make ends meet. So we're in a pickle, and ultimately, in basically, when you're in a record debt level that we have, it's in almost everybody's interest to let the currency devalue so they can more easily nominally pay off all the debts they've accrued. And so you look at the government sector, the corporate sector, the household sector, you name it. Everybody's in debt at record levels. And so, yeah, it's going to be in the interest of most everyone to see the currency devalue and to be able to pay off those debts without defaulting. And I think I don't see anything, in the future that's changing that, except for maybe some deflationary crash for a minute or two. In that kind of scenario, yeah, you might see commodities sell off. You might see the US dollar get a bid and grow in terms of purchasing power versus other fiat currencies. But ultimately, what's the Fed going to do? They're going to turn around and hit the QE, infinite QE button again. And what's that going to do again? It's going to drive inflation. So the cycle will keep going, I think. And we're living in a new secular change. I think it's just, this decade into the next is inflation is the come hell or high water drive of the powers that be in the financial class.
So James, we're going to have a virtual conference coming up this January 26th. You're going to be our keynote speaker to lead the whole thing off at 1 p.m. January 26th. We'll put a link below in the description. Give us a preview of what you're going to be talking about at the conference.
Yeah, we talked about it the other day in the email, and I was thinking about, well, what's the subject that I should talk about. And I mean, the last time I did it with you, it was when to sell silver and when to sell some gold. And I think I'm going to do it again because it's a worthwhile thought discussion and chart and looking at the data and just kind of gaining an aspect or an idea as to when we're reaching at least fair value with bullion and maybe overvaluation, and maybe a little bit more on tactics that someone might use in doing that. And so yeah, I think that's the topic, because it's pretty easy right now to tell people that the best asymmetric bet is to buy silver bullion, and other things like platinum would probably be a good long-term value. Gold essentially is certainly worth having in your portfolio as well. That's easy to tell someone, but the harder thing to tell someone is, okay, well, when should you start lowering that? Because it's going to gain in value versus other assets that you own. And at some point, you probably want to take profits and move those profits into other asset classes. And so, talking about that subject now, not later, makes, I think, good sense in terms of getting people wrapped around, not only the entrance of an investment, but also the exiting of some of the investment.
Yeah, it's good to know everything's cyclical, so don't stay in anything too long.
Yeah, you can't marry to one thing or another. Obviously, you can get irresponsibly long in one thing or another, like I have. But I mean, it's a brutal long. It's been waiting a long time here.
That's right.
Happen. I mean,
some of it's 10 years, right?
Yeah. You're basically shorting the entire system by doing this. But just look at where the system is right now, and it feels like, yeah, this decade is going to be a pretty good one for the precious metals.
I agree with you. Thanks, James. Thanks for jumping back on. We appreciate it.
Yeah, thanks for having me, Rob.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.